An American journalist on Bloomberg just delivered a verdict that undercuts Donald Trump's entire pressure campaign. Since Mark Carney became prime minister, Canada has outperformed the United States, the Eurozone, and the world, and global capital is following. He did not hedge. He did not soften the edges. He said money is pouring into Canada at a rate not seen in a century. He said that since Carney became prime minister, Canada has outperformed the United States, the Eurozone, and the rest of the world. He said Canada ranks alongside Switzerland as one of the most loved countries on the planet, and that this reputation flows directly from Carney's leadership. Then he turned to Donald Trump's tariffs and described the damage they are doing to American industries, including a California wine sector that is hemorrhaging. His conclusion was blunt. In this relationship, the worst part of the bargain is now south of the border. This is not Canadian propaganda. This is an American voice on a major financial network, stating what the numbers and the reputation data already show.
You follow the money and you found that it is actually going to Canada.
This is one of the greatest periods for overseas investment in Canada that we've seen in the century. And it may be unprecedented because, we have to wait for the rest of the year. But the short answer to your question is that money is pouring into Canada like we have not seen from everywhere.
His first point is capital. Overseas investment is flowing into Canada at a pace described as one of the greatest in a century, possibly unprecedented. In a world of uncertainty and tariff chaos, global money is voting with its feet. It is not fleeing Canada. It is arriving. That single fact undercuts the narrative that Trump's pressure campaign is isolating or weakening the Canadian economy.
Canada, since Mark Carney became the prime minister in March of 2025, has outperformed everyone in America and also the Eurozone and everywhere in the world. The 10 largest stock markets in the world, Canada appreciated the most, more than 40%. Okay, and we know the past year has been pretty good for stocks.
Yeah.
Canada's done great. Its bond market is also doing great, partly because the inflation rate in Canada, unlike the Eurozone or America, is actually trending lower, okay, and is outperforming both the Eurozone and the U.S. Aside from the money coming in, Canada is beloved. When I say that, if you go to Atlas, World Atlas, Canada is right up there with Switzerland as the most loved country in the world, okay? And guess why? Because of its policies being so reasonable.
The performance data is even more striking. Since Mark Carney took office in March 2025, Canada's stock market has risen more than 40%, the strongest gain among the world's 10 largest markets. The bond market is also strong, supported by inflation that is trending lower than in both the United States and the Eurozone. While Trump's tariffs generate noise and volatility, Canada under Carney is delivering quieter, measurable outperformance.
And where do you think that comes from? It comes from this guy, Mark Carney. Who is he? Well, he happens to be a Rhodes Scholar. He was a governor of the Bank of England as the first non-British citizen to do that. He was governor of the Bank of Canada. He was running Goldman Sachs operations before he got to the Bank of Canada. So this is somebody the world is and spectacular Davos man. So this is somebody the world knows very well. He's very reasonable.
Reputation follows results. According to global surveys cited in the interview, Canada now sits alongside Switzerland as one of the most loved countries in the world. The journalist does not attribute this to geography or nostalgia. He attributes it to policy, reasonable, predictable, evidence-based policy, and he finally names the source: Mark Carney, Rhodes Scholar, former governor of the Bank of Canada, first non-British governor of the Bank of England, former Goldman Sachs executive, a figure the international system already knew and trusted, before he ever entered Canadian electoral politics. The world is responding to competence it recognizes.
They're moving on in terms of doing deals and so on and so forth.
I mean, look, I have to say, tariffs, we all know, are taxes on consumers, and it should be said that way. And what has happened, especially that is egregious to the United States, is that we export a lot of booze. Okay, we're pretty good at that, liquor and wine. California is hemorrhaging because provinces in Canada, not the federal government, but provinces in Canada are so understandably annoyed at the U.S. that they have decided to keep American alcohol off their shelves. And the California wine industry is just hemorrhaging at this point. I mean, it's something like $500 billion we're talking about. So that's an example of how bad this is.
Then comes the cost to America itself. Tariffs, the journalist reminds viewers, are taxes on consumers. In this case, Canadian provinces, not even the federal government, responded to U.S. pressure by pulling American alcohol off their shelves. The result, the California wine industry is described as hemorrhaging. A sector that once took stable access to the Canadian market for granted is now paying a visible price. This is the boomerang effect in real time. Measures intended to punish Canada are landing on American producers.
Not only having been our most steadfast ally in American history since Canada became a country separated from the Commonwealth, but so much of the U.S. depends on Canada in so many ways, and it's a symbiotic relationship. And right now, the worst part of the bargain is actually south of the border, not north of the border. And as long as this continues, that's going to be the case.
This may be the most damaging line in the entire interview. The United States and Canada have long shared a deeply integrated, symbiotic economic relationship. American industries have relied on Canadian energy, resources, supply chains, and market access for decades. Trump's approach treated that interdependence as a weakness to be exploited rather than a mutual strength to be managed. The result, according to this American analyst, is a clear shift in who is bearing the heavier cost. The worst part of the bargain is no longer north of the border, it is south of it. American exporters are losing access. American consumers and manufacturers are absorbing higher costs. And the country that was supposed to be brought to heel is instead attracting capital, posting stronger market performance, and expanding its options. Trump's strategy assumed maximum pressure would produce maximum leverage. What it is actually producing is self-inflicted economic pain at home and a Canada that is becoming less dependent, not more compliant. When even voices on Bloomberg begin describing the imbalance this way, the gap between the political rhetoric and the economic reality becomes impossible to ignore.
And so what's happening here is that Canada, and Carney specifically, is traveling around the world. He's connecting with just about every potential trading partner there is, which is something that his predecessors didn't really have to do. They didn't have to think about it. He's doing it. And this is going to pay off for Canada. It's going to get increasingly more of a partnership arrangement with countries around the world that it didn't have before, and that's because of Trump tariffs.
The final insight is strategic. Because of Trump's tariffs, Mark Carney is doing something previous Canadian leaders rarely had to do at this intensity: traveling the world, opening new markets, and constructing a broader web of partnerships. What began as a defensive response to American economic pressure is accelerating Canada's diversification. The Carney factor, as the journalist calls it, is turning a crisis of reliability in the old relationship into an opportunity to reduce dependence and expand options. An American financial journalist looked at the data, the capital flows, the market performance, the global reputation scores, and the damage to U.S. exporters and reached a clear conclusion. Under Mark Carney, Canada is attracting investment, outperforming major peers, maintaining international goodwill, and converting external pressure into long-term strategic advantage. Donald Trump's tariff strategy was supposed to force compliance. Instead, it is producing capital inflows into Canada, higher costs for American industries, and a Canadian Prime Minister who is systematically widening the country's options. The numbers are not ambiguous. Neither is the reputation data. Neither is the assessment coming from Bloomberg. If you want analysis that follows the money and the results rather than the noise,